on. I heard some student, they said you're moving to Alberta. Is anybody tell me they're moving to Alberta, right? Next year or something. Did you hear me, anybody?
Yes, ma'am. I heard someone was moving next year.
Okay, so probably he's not there. It's the boy. Probably he's not there today. You're here. So I give you a suggestion in case why I talk is in case I forgot it. Okay. So when you plan for moving, is the good thing is you find the job here. You find the job in, for example, you want to move Edmonton, then you find the job in Edmonton. Or you find a job in Calgary, then in this case you move, okay? Then the moving expenses can deduct. Otherwise, you move to Calgary, then you find the job, you will find the job right away. Okay, you find the job in 2 months or something. Then I don't know how long, okay? I don't know how long, but as soon as possible, then your moving expenses can deduct from your tax. Otherwise, they won't let you deduct. Okay. This I tell you before I start with donation. I tell you, you have to plan first. You have to plan first. Then moving expenses is huge. Normally, it's huge. If you can deduct, that's good. If you can deduct, it's good. It's above 5,000. Okay, some people they over 10,000, so that's a loss. So you can save loss tax, but you have to plan ahead. Okay, so the donations.
Okay, thank you, ma'am.
Yeah, then if you want to know moving expenses, then we will find the time. So moving expenses for accounting student, I usually introduce for accounting student when in person. Okay, when I teach in person in East West College, I just give them practice. There's lots of knowledge. That's a good thing. And also, but moving expenses is not popular. The few people, they use that. But still, if you have moving expenses, it's a big deal. I tell you, it's a big deal because there's a large amount. Okay. Now we just come to donations. So the donation, you can claim tax credit for your donation. So your donation not in the donation is not only for money, and then you still can donate that property, right? You can donate property. Then you donate gifts, culture, and ecological gifts. Something like the property is real estate, capital property. We know real estate, or the shares in the company, right? If you want to donate, you donate to qualified organization. So what is qualified organization? There's two things. You get when you donate. Before you donate, you need to find that you give them the organization. The organization, they will give your receipt. Okay, the receipt is called officially donation receipt. They will see is qualified organization or not. If you're not sure, you can check on CRA website. The CRA website, they have a donation organization list. The list there, so you can find out. Okay, you can find out if they are on the list or not. So usually, I tell you that usually almost every school, elementary school and high school, okay, it doesn't matter it's Catholic school, a public school, or private school, doesn't matter. Almost every school, they are all qualified organization. But for something else, I'm not sure. Okay, church is normally is qualified organization, but church you still need to find the name on the list. Okay, you still need to find the name if you're not sure. So you find the name on the CRA list, then you're comfortable. So this one would be qualified. Otherwise, it's not qualified. As some organization, this says, I don't know, there's lots of religions group, right? The religions group, they ask you for the donation. So you just donate. But if you want to get tax credit, you need to check. Okay, you need to check if there's a qualified organization or not. If it's not, then you won't get credit. Don't put on the T1. Don't put on T1. You just donate. That's because you want to do something for them. Okay, you donate but not get tax credit. The second one is, of course, you have official donation receipt. The receipt is the supporting document in case CRA wants to see it. Okay. The another thing is, this one is you just have to know. You can claim up all or part of your donation up to limited 75% of your net income. If you don't have a net income, you cannot claim it. Okay. But we were talking. Is a family donation. You can put on your spouse or something. That means the system will automatically calculate for you 75%. You're under 75%. Okay, if you exist 75%, the system won't give you a tax credit. That because we are we are not do a paper return. We are doing electronic return. So the system is automatically calculate for you. So this one you just keep in your mind. It's it's up to 75% of your net income. It's under your net income. You see, we are talking to credit is connect to your net income. Okay, not total income. We're using net income. So claim amount must subtract 200. Okay, so this says must 200 more. That means any amount they subtract 200. Like your donation is 1,000. Then they just calculate your 800. They subtract every time you claim, they subtract the 200. Okay, when you completed your return, you can claim the donation you made during the year. Okay, during the year, as well as any unclaimed donation amount from past 5 years. That what mean is this important. Okay, this is important because lots of people, they only know donation, like now we do 2021 return, so they only know 2021. I can put donation is only 2021. That's it. So if you have 2020's return and the 2019, 2018, 2017, 2016, so that's past 5 years, you still can put it. So total is how many years? Total is how many years? I find this class is very quiet.
4 years, ma'am.
So total is how many years? We read this one, okay? When completing your return, you can claim donation you made during the year, as well as any unclaimed donation amounts from past 5 years. So that means total how many years I can claim?
6.
6 years?
Yes, 6 years. Keep in your mind, 6 years. So some students, some people, they only know 1 year. Is when I do tax return, I only know, okay, in 2020, I have a donation, then I put the donation here, 2020, 2021. But you still can claim if you 2020, like for example, you have a 2020 is 100 donation. 100 donation in 2020 do tax return, you won't get anything because 100 subtract 200, you cannot get it. Or you have a 200, then you 200 donation subtract 200, then nothing. Okay, it's got nothing. So in this case, you keep it. In this case, you keep it. And this year, you add up all the 5 years, 6 years together. Okay, last year and last 5 years, you are not claim. Then you add up 6 years together, then you can claim. That is you can make your you can get the credit. Okay, so there's lots of people they don't know. Okay, lots of people they don't know this as I cannot claim. Then they throw to the garbage. Keep it. Okay, and also we will continue. The federal credit for charitable donations is calculated on Schedule 9. We will doing on Schedule 9. Okay, the doing on Schedule 9 they will go to T1 page 6 on 34900. It's 114. I believe the line is 114. Okay, we will come. I will show you. So Schedule 9 is for donation. Okay, I'm going to teach you Schedule 9. So tax tip, that's important. The tax tip. The tax tip is helping you to save tax. If you and your spouse have donations for the year, you can combine your donation amount and claim them all on one partner's return. So if you have a donation and your spouse have a donation, don't separate them. Okay, you put together. We call the family donation. You put it together. Put on who, claim on who. I tell you, claim on the person with high income. Okay, you keep in your mind. You put your husband and you the claim together. Okay, donation together, put together. Okay, then you put on the person with high income. That's it. Okay, then you get higher tax credit. Because if you separate, then everyone is subtract 200, right? So every donation when you enter is subtract 200. So you won't get high credit. You put together is only subtract 200. But if you separate, you subtract 400. Then each person subtract 200, then you subtract 400. So you can even save all your donation receipt and claim them in future 5 years. That means because we know when you claim, every time when you claim that donation, charitable donation, you subtract 200. So in this case, you put 6 years together. Then you only subtract one time, 100. Otherwise, every year you subtract 100 and 100, and the 5 years you lost. In 5 years, you lost 1,000. So in this case, you want to get more credit, higher credit, then you just put in 6 years, okay? In the maximum in 6 years, but you need to keep your receipt in safe. Otherwise, you lost it. That's another story, okay? You are not organized, then you lost. Then, okay, so that's the one. Okay, first thing you combine your family couple, combine your and your spouse's donation. You put together. And another thing is good is you just keep it for 6 years. At 6 years, then you claim for all the things. Then you get high credit. So that's basically is here. So that's straightforward. It's very simple. Okay. Then that's what I said. It's very simple. Then I show you here. Okay. Then I show you Okay, so anybody, if you want to take a screenshot or you want, sorry, if you want to take a screenshot, you feel free to take a screenshot. Do you want to take a screenshot for the donation
Yes,
or
ma'am.
take a picture? Okay.
Yes, ma'am.
Okay, so feel free to take a screenshot. Sometimes I forgot. Okay, then you tell me you want to take a screenshot. So keep your file. So done?
Yes, done, ma'am. Thank you.
So now I just open Cindy's file, okay? I just learn, I'm not enter anything. I just open Cindy's file, let you see the donation. So donation is on T1, page 6, line 114, okay? The 114 is official that line is 34900. It's here. Donation and the gifts. So it's come to schedule 9. So how you find the schedule 9 is 2 ways to find the schedule 9. Okay. The simple way is you double click on this one, because if you know the line, line is on 114, then you click on that. Then they will give you a schedule 9. Okay. That's the one way. It's the simple way. That's the most software. Okay, most software, like for example, QuickText. I use lots of TurboTax. Now before they called the QuickText, now they call the TurboTax, and the U-File, and text-free way is something like that. Then StudioText, you just double click. If you know which line, then you double click that line. They will give you a schedule, and that's the way. Another way is you go to Forms. Okay, you go to Forms to find out. You go to Forms to find out Schedule 9, because Schedule 9 is already here. So I know I already get Schedule 9. Otherwise, on the app box, you can find out. Okay, Schedule 9. So I would like to so that donation and gifts. So the donation gifts is basically is line 1, line 2, line 3, line 4. So that's the donation, okay? And which line we need to put. And also, if you know, notice. So line 1, the background line 1 is what? Is what color on line 1?
White.
So the white, like I said, line 2, line 4, line 3, line 4 is yellow. So is yellow color, then you just directly enter the number here. You just directly enter the number, okay? Then something like that. So for line 1, the white color, you cannot enter directly. You just double click it. Then they will give you a detail, okay? First thing is amount. Then the description. So the description is who you donate. Okay, the money, who get your money. All the description you need, the important things you need to put. Who the money you give to, whom the money you give to. Okay, they get your money. So that description is you basically put here. Okay, that's amount. So you put 1 by 1 because it's more than 1. Okay, and now I want the student to read line 1 for me, then a student in line 2 and line 3, line 4. So now we come to line 1. So I want student to read line 1. Voluntarily, who wants volunteer to read that?
I can, ma'am.
Okay, please.
Okay, line 1.
Mm-hmm.
Donations made to registered charities, registered Canadian amateur athletic associations, registered journalism organizations, and registered Canadian low-cost housing corporations for the aged.
Okay, so that's Canadian, all the things from Canadian, right? Those are Canada, inside of Canada, there's charity. The line 1, thank you. Who wants to read line 2?
I can read, Ma'am.
Okay, please.
Donations made to government bodies like Government of Canada, a province, a territory, registered municipalities in Canada, or registered municipal or public bodies performing a function of government in Canada.
Thank you. So this line 2 is also in Canada, but different is they just donated to government bodies, okay? That's a government body is including government of Canada and the government of province, okay? It's a government body. And the city, okay? The city, like say, city of Calgary, city of Edmonton, the city of Regina, that's the city. And the government of Canada, of course, if you donate for CRA, but donate for the Service of Canada, the government body. It's not political, okay? Not you donate to particular party. So that if you donate to particular party, that's a political donation. So this one is government. You donate to government. Line 3, I want somebody read for me.
I can read it, ma'am.
Please.
Line 3, donations made to a registered universities outside Canada.
Yes, thank you. So make sure that university is outside Canada. Okay, it's outside Canada. And my question is, how about inside Canada? For example, I donated to University of Regina, the Saskatchewan, University of Alberta. So what this one is come from, we put which line?
Line 2.
Line 2 is donate made to government body. So there's University of Canada is University of Saskatchewan, or University of Alberta, University of Calgary. So is government body, is government of Canada or government of Alberta?
Should be in line 1, ma'am.
Yeah, it should be line 1, okay? It should be line 1. Because University of Alberta is not government of Alberta. So if you make a donation to government of Alberta, it should be line 2, okay? Line 4. Is anybody read for me? Line 4.
Yes, Sharon, I can read.
Yeah, please.
Donations made to the United Nations, its agencies, and certain registered foreign charitable organizations.
Yes. So this one, thank you. So these ones also is outside Canada, right? It's not inside of Canada. It's outside Canada. So the donation made to the United Nations, and then it is or its agency. That's a United Nations agency. For example, is WHO, WHO, right? WHO is United Nations agency. Then the 13 registered foreign charity. So the foreign charity and organization, like for example, Red Cross, Philippines. For example, the Philippines, they have an earthquake or flood, then you make donation to Philippines Red Cross. You make that donation to Philippines Red Cross, then this come from which line? Which line?
4.
It's line 4 because it's come to foreign charitable organization. Okay, but how about if I make a donation for Red Cross in Canada?
1, ma'am.
1.
Yeah, it's 1, not 2, okay? Keep in your mind, 2 is only for government body. Okay, government body. What government body? That means government of Canada, government of province, government of city, municipality, city. Okay, then it's kind of things. It's all registered municipal and public bodies perform function of government. They perform function. You keep in your mind is perform function of government. If anything regarding its government is line 2, otherwise it's go to line 1. So in Canada, inside of Canada, only line 1, line 2. So it's easy. If I give you a donation, it's line 1, line 2. You don't think about line 3, line 4. So line 1, line 2 is in Canada, donate. But only difference with line 1, line 2 is line 2 is a donation to the government body. If it's not government body, all goes to line 1. Okay. Line 3, line 4 is outside of Canada. So what outside Canada is easy is only university is go to line 3. I said university is a foreign university. It's outside Canada. Okay, the university like Harvard, Yale, you donate. Okay, then you donate Oxford. So something like that. So it's the university outside Canada. So you go to line 3. Otherwise, for foreign organization, is all goes to line 4. Clear? Is clear?
Yes, ma'am.
Yeah, is there any question for that? I think it's very straightforward. At least you understand line 1, line 2, line 3, line 4. Then also there's line 1. You see, like I said before, that line 1 is lots of things because inside of Canada, most things I give to you is line 1. So most things you got is line 1. Like you donate some in church, you donate some money to the church, and you donate some things to the gift. Like I did is I purchased a bunch of books to the school, to send to school, the classroom or something like. This one is still when we have a qualified receipt. Okay, you go to school, then these all the you send to school, then these all the qualified, because I said school, any school, almost every school is qualified organization. So in this case, you have receipt for that. So this case is all goes to line 1. So because line 1, they have a lot of item. So what you do is you just you cannot put the total number here, right? So you just click on that. You click on that, then you enter one by one. Okay, you enter one by one. So this one is amount. So description is the organization you donate to. Okay, the organization who you donate to. So that's this the one. Okay, you just put. Then this one is the transfer your spouse's return. You don't need to transfer your spouse's return. Okay, you just directly you just doing here. You don't need to do anything up there. Okay, carry forward amount. You don't care anything here up here. You only do things here. Okay, so you only do is you enter one by one. That's it. And keep in your mind is 6 years. So now you can do 2021 because we do 2021 return. Of course, you 2021. Then before 2021, if you unclaimed, that you never claimed before. Okay, if you have a receipt, then you never claimed before is 2020, 2019, 18, 17, 16. Okay, up to 16. If you still have a 14, 15, then you throw the garbage. Is not qualified anymore. Okay, you most time is On line 1, there's lots of, but line 2, you see, government body is very few, so you directly put over there. Then line 3 is same thing. It's outside the university outside Canada is there's very few, and also there's a foreign country is only one item or two item you put together. That doesn't matter. So that's I tell you why the line 1 they have a detail. They ask you detail than your total here. So it's very easy. It's very easy for donation. So I hope everybody can get it. But I'm going to let you practice. But now, because this one is straightforward, so I'm going to give you practice on Friday with medical expenses. Okay, with medical expenses, I'm going to give you on Friday.
One question.
Yeah.
Is there any maximum tax credit that you can claim for donations? Is that the 200 or?
Yeah, that's 200 is a subtract. Like for example, you have a 1,000, then they subtract the system will automatically subtract 200.
Is that
So
the
they
maximum?
only, yeah.
Okay.
So they subtract, and also they says it's depend on your net income. So you cannot exist your 75 net income. The system will automatically calculate for you. You see, line 6, they calculate 75% of net income. Okay, so because I got, I opened Cindy's file because I didn't put any information on Cindy. So Cindy's income is 0. So they won't get anything here. But if they have an income, then the system is automatically calculate income. Like for example, Cindy has a 10,000, then there's 750. Then this one is line 6 is 750. So your donation is compare. If your donation is 1,000, then you compare 750. It's only you can get 750 there. Okay, the 1,000 they won't let you get a claim. Yeah.
I have question, ma'am. For example, like your donation, you and your spouse donation total of $7,000. So how much you can claim for that $7,000? Can you claim the $7,000?
Yeah, you're possible. You live next year, 6 years. Okay. And because it's 200, so you put 700, you put 70 or 75, you won't get anything because they just says 200 more. The system is automatically subtract you 200. So in this case, you just keep it. This year you cannot claim. So next year you're waiting for 6 years until you get 200 more, then you can claim it. Okay, but don't over 6 year. If over 6 years, then you lost that.
So yeah, for example, next year you have a 7,000 donations. So
70.
how much like is the maximum?
There's
that
no
you can
maximum.
There's no maximum. Okay.
There's no maximum. The maximum is 75% of your net income.
Okay.
Okay, so as long as you have a net income, nobody can reach over 75%. So also you put because this one, and also like I said, you put on the person with what? With low income or high income?
High income.
Higher.
Yeah, with higher income, what happened is because that's credit is on page 6. So the page 6 114, right? Page 6 114. So they still is a federal non-refundable credit. So non-refundable credit is you put on person with high income is better. Okay. So this one is like the system is automatically times 15% of your tax of your credit. Okay, so you for example, you qualified donation is 1,000, then you the times 15%, so you only get 150. 2,000 is 300. 2,000 is 300. So if it's 1,000 is only get 100 is is 150 credit. Okay, so that's anything is 15%. They times 15%. The system, okay, the system is automatically times 15%. That's it. And because because I'm not, and that's donation is simple. As long as you have to remember, you just put your and your spouse's donation together, okay, and you can wait for 6 years. Wait for 6 years, then you claim. That's the you remember there's two things. Then you can get higher tax credit, and another thing is you put that amount on the person with high income. That's straightforward. It's only sometimes you confuse like some people, they don't know, put line 1, line 2, line 3, line 4. So I just tell you line 1, line 2 on schedule 9. Okay, schedule line 1, line 2 is line 1, line 2 is in Canada. Line 3, line 4 is outside Canada. It's a foreign country. So what difference with line 1, line 2 is line 2 is a government body. It's government of Canada, government of your provincial, right? And the government of your city. So something like that. They perform the government duty. In this case is line 2. Otherwise, all goes to line 1. That's easy, right? So for line 3, line 4 is outside Canada. So it's still easy. Is when there's foreign universities, you put line 3. Other than university, you put line 4. That's easy, okay? That I don't think is anybody get confused for that. I think every student is good. So now we still have a half an hour. I still have a half an hour because you are accounting student. So I'm talking about the CCA. So the CCA, what's the CCA? I add up information for CCA. Okay. So what is CCA? Is anybody tell me what is CCA is?
Capital cost allowance, ma'am.
Yeah, capital cost allowance. So capital cost, what is the capital property? What is capital cost property?
Like when you start your business, or like for example, if you buy an equipment,
Yeah.
you can get a tax credit for that for I guess 5 years. I don't know, not sure.
Yes. So yeah. So that's basically the capital cost. The capital property is that's property is the expenses is last for longer, right? For example, your building. The building is you can use it for over 50. Sometimes it's 100 years, right? It's dependent on some building. For example, you got appliance is stove. At home, you have a stove, I have fridge, okay? The stove, fridge, if you do the rental property, then the expenses, you spend the money for you purchase your stove, new stove, or you replace your stove. The stove is broken, you replace the stove. So the stove is not only for your 1 year, right? You can use the stove for over 10 years. Some people, they over 10 years, but some people at least 5 years. Okay, at least 5 years. But in some, it's bad quality. Sometimes there's the 1 year broken is another things. Okay, that's most, we said this property, most kind of this property is at least 5 years. So so this one we call the capital property. Okay, capital property. And the computer is same thing, but not for 1 year. Okay, is for couple year and more than 1 year. So this is the capital property. Another thing the capital property, they have a money limit. Like for example, you purchase the screwdriver. The screwdriver is only cost $10, but you says screwdriver you can use over 2 years, 5 years, or some many years, not only for 1 year, right? So the screw is not, you says screwdriver is so the screwdriver could be capital property. The answer is no. So the capital property, we set up another rule is 500. So for the small tools, if over 500, so we will see that capital property. For the tools, only like screwdriver is only $10 or $20. So the ruler is the I saw that construction guy, they use very big ruler that's Stadio, and the very beautiful ruler. So it's cost over 100 and it's less than 200. So even that one you can last for longer. They use them for over 10 years. And the T shapes that ruler. So it's cost 100 something. So still this one, they use them for over. I got them. I saw that guy they use them for over 10 years. So even this one is still we just put expenses. Okay, it's not capital cost. It's not capital property. Sorry, it's not capital property. So capital property, they have two rules. The one is it lasts for longer. You use this one and you can use them longer. Okay, they last longer. They last at least over 1 year. Okay, at least over 1 year, not only 1 year. So that's another thing is 500 more. Okay, like for example, vehicle. So the vehicle, you can drive it for not only 5 years, right? Some people, they drive it for more than 10 years. Very popular is 5 years at least. So this vehicle, and that's the one thing. Another one thing is 500 more. Okay, so the vehicle is capital property, and the building, of course, capital property. And there's small tools. You have to decide it is if over 100, if over 500, there will be capital property. If it's under, like a camera, that camera, if it's over 500, there will be capital property. That if it's lower than 500, then it's not. Okay, so that's the one thing. What is capital property? Then another one is what happened with capital property. So capital property, that money you do expenses, the cost. Okay, the cost. Then you have to certain percentage to put expenses over 1 year. Like a computer now, they only put 2 years. 1 year is 50%, another one is 50% because computer they update very quickly because it's the technology. Then for the building, it's over 13 years, 30 years, 40 years. So every time you only put 10,000 or 5,000 over then the expenses there. You cannot put the whole cost in that year for expenses, right? For that for that appliance, for like I said, the stove and the washer and the dishwasher and the fridge, something like that. Then you just put on you just put that money is every year is 20%, okay, to the expenses, then over 5 years. It's something like that. So there's a percentage. How you find the percentage? Some percentage I can't remember, okay? Then I will tell you how you find the percentage. Then the percentage is you just click, okay. You just check on CRA website. So when you go with me, there's lots. Okay. Do I share my screen anyway?
Not yet, ma'am.
No, ma'am.
Okay. Okay, sorry. So here it is. That's the so you see that you go to cra.gc.ca. So you share my screen? So do I share my screen?
Yes, ma'am, yes.
So you will see that search. You search is CCA, capital cost, CCA classes. Okay, the CCA classes. Then you get that CCA classes here. Okay, they come to CCA classes. Then you click on CCA classes. They will tell you a class number. So class number is important. Okay, so class number is 1. So 1 including the buildings. Okay, most buildings. The class 5, then the read. Okay, you have to remember. No, there's class 3. Okay, so the class 3. So normally, that's the things is that's class 53 is no, that's I need tell you is okay, let's do that. Then you just read this one, okay? You read this one, then I will you said the class 52. 52 is a general purpose electronic data process equipment, computer hardware, and the systems software for that equipment. Some software, okay, expensive, then including ancillary data process equipment if you required after January 27, 2009, then it's before 2011. So before 2011 is 100%, now it's 50. Now if you got computer, the computer is class 50, okay? 50, that means you goes to 55%. So that's computer, laptop. Okay, computer laptop is class number is 50, not 52. Okay, 52 is before 2011. Now they changed. Okay, so for software, for the system software, they got 2000s. They got 52. Like for example, my husband, he is geologist. Then they have a geological the software, special software when he do the job. So this software is very expensive. I think he got every 5 years he purchased is 5,000. So the 5,000 for that software for his geological system. So that software is 52. So 52 is 100%. Okay, 52 is this is a percentage. It's 100%. Okay. Then I will show you most one is where it is. There's nothing here. So that's the furniture. And they just give to you, you read, okay? Then also I have some popular things. Okay. I did some popular things. So you just take a screenshot, okay? For the CCA, you do accounting, you know the CCA, right? So that's here. Okay. Why there's something there? Okay, here. So the class 50, like I said, is a computer. Okay, this one is very popular. So there's class 50. Class 50 is 55 is computer equipment. Then class 46 is data network, and that in first this one. And this class 12, I said, is small tools. So small tools, they will 100% go to expenses. So actually it's not capital cost. It's not capital cost. So but they just put, okay, they says 500 limited. That means under 500 is called small tools. So small tools is 100%. You go to the expenses that year. So class 8. The class 8 is very important, very popular. So when you're running business, you purchase that any equipment. For example, I have a student. They just are doing clean. Is I think it's commercial clean. So the commercial clean, they purchase like a vacuum, and there is some tools, okay, and over 500. So in that all things is class 8. So when you remember class 8, because we're doing electronic tax return, I'm going to show you when you put class 8, they automatically give you 20%. And then when you do a rental, you have a rental income. So when you purchase furniture, so the furniture is class 8, and all the appliance is class 8, okay? And all equipment. When you're running small business, you purchase that office equipment, desk, chair or something is then this furniture is all the furniture is class 8, okay? Sofa, something, and equipment, and also the equipment machinery. So that's all things. The machinery, all things is class 8, but is only a vehicle. I'm talking about vehicle now, okay? Vehicle is special rule. So take screenshot, then I come to the next. Okay, take screenshot, then I go to the next. Okay, this is the vehicle. So the vehicle, they have a class 10 and the class decimal 1, okay? And the class 10 decimal 1, they all 30%. All 30%. What different is class 10 and class decimal 1 is these are all the vehicle you purchase from your this vehicle. So first thing is this vehicle you purchase for running your business, okay? Not for your personal use. If your personal use, I'm going to teach you use your personal vehicle to running business, then this is another story. So this vehicle is only for running your business only. So for example, you purchase a vehicle like my brother my brother, he is electrician. So he purchased like the vehicle is for that, he goes to everywhere to do his job. So he put all the tools in his vehicle. That's the special rule, a special van. That's kind of van. Then this one is you can put class 10 or 10.1. I'm going to talk to you, okay? What is different and 10 and 10 to 1, 10.1. So this vehicle is for your, especially is for your business use. For some student, then I got some student, her husband is a taxi driver. He's running taxi business. So he bought that vehicle is for taxi use. So that is, the vehicle is including here, okay? So different with class 10 and the class 10.1 is class 10 is when the vehicle cost is under 30,000, okay? Is under 30,000. If it's over 30,000, then you put a 10.1. Okay, the class number is 10.1, over 30,000. So this one is not including GST. 30,000 is not including GST, okay? So motor vehicle, understand? So the motor vehicle is cost is not including GST. Is under 30,000, then you put 10. So if it's over, then you put 10.1. So that also is 30%. Okay. Then they have a rule. Okay, they have a rule for something. If you are running business, you said I need you deliver pizza, then you purchase some vehicle. Then the vehicle must be there's lots of rule in CRE website. This says okay, 90% you use under some kind of vehicle is 90%. You have to use your business, and 10% you use your personal use. It doesn't matter. Then you will see this vehicle is for your business use, and some vehicle is 70%, like a truck or something. But they have a rule. Okay, they have a special rule. You just go to CRA website. Then otherwise, it's your personal use. For your personal use, you cannot deduct the CCA. Is only for business use. Okay, this one is always true when you do T2 return. T2 return is incorporation return. We are doing T1, right? T1 is a personal income, and T2 is incorporation return. So the small business or something is still same thing. Is CCA. So CCA is very important. So that's the same thing, okay? If you are running small business, your company purchase vehicle, so that vehicle is under your company's name. Under your company's name, then you depend, if it's over 30,000, then you put 10.1, class 10.1. They are both 13. They are both is 30%. So class 16 is taxi vehicle card. Okay, so class 16. So taxi, they give you more. So if your taxi vehicle, then it's class 16. So class 55, like I said, no, class 55 is different. Okay, as I said, class 50. Class 50, don't confuse with class 50 is computer. Okay, class 50 is computer. Class 55 is that's zero emission vehicle. That's expensive vehicle. Okay, that's not popular. So the basically is here. So basically is this one. Okay, so very popular is the vehicle. You have to know. And another thing is class 50, class 50, and class 8. So normally class 8. Class 8 is lots. Okay, I normally doing is only this one. So class 50, class 12 is small. Class 12 and class 8. And then class 10, of course, vehicle. That's it. So I don't get that class 16 and the class 55. So if you want take a picture, you can take a picture. Now I can do, and now I just do that for you. Okay. How you put on the studio text. So anybody want to take a picture for this one?
I already did,
Thanks,
ma'am.
ma'am.
Thank you.
Okay,
We're
so
done.
okay. We'll just hurry up. So now, like for example, I just open this file. It doesn't matter. Okay. So open this file. If you do a self-employment, the self-employment and the rental income is the same thing. Okay. CCA for CCA is the same thing. Self-employment is self-employment is T, I believe it's T2 T2125, I think. Yeah, here. So T2125 is business, the business activity. You click on this one, then you click on down button, then you okay. Because we just go through that one on last Friday. So CCA is here. CCA is here, okay? CCA is here. Calculation of a capital cost allowance, CCA claim. So what this one is doing is, this one, the first thing is class number. That's why I said the class 5, class 10, class 8 is very popular. Then the class 50 is a computer, right? Then class 10 is a vehicle. So this class number you put here. And as long as you're, like for example, it's class 8. As long as you put class 8, then they will goes to give to you 20%. Okay, so another the class number you have to know. Then column 2 is on. Column 2 is on under appreciated capital cost at the start of the year. At the start of the year, that's because we know capital cost is every year, like class 8 is every year you only have a 20% to your cost. So that means if you carry forward from last year, then you have a number here. Okay, so at the beginning of the year is you have to continue look up last year. So last year is column 13, the last column. Okay, last column this says UCCA at the end of the year. So end of year, last year, end of year. Then you go this year is the number is the same. You copy from here. You copy from last year. Okay, last year you copy from here. Okay. That's basically like for example, last year is 1,050. Then you just it's last year. That's the last column. Okay, last year, last column. Then they will give to you is 20%. You see here is 20%. So 20% of 1,500. Then they give you 300. So this 300 is this year goes to your cost. Okay, this year goes to cost. So that's the same. That's that's 15,000 is where come from. So 15,000. This number is from last year. That's last column. Okay, last column you just copy it. So how about this year new? Then this year I want to buy I purchased that this year. For example, I purchased equipment. Okay, this year is something like for example is vehicle. Okay, this year is a vehicle. I purchased 50,000 50,000 is vehicle here. Okay, 50,000 vehicle, but this year, because we know 50,000 vehicle is 10.1, right? It's 10.1, 50,000 over 30,000, 50.1. But it's not for last year. Last year is there's nothing. There's no number here. It's no number here, but we only purchased this year in 2021. So when you purchase here, then you go to area B, the detail of equipment addition in this year. Then you put a 10.1. Then the vehicle you put whatever vehicle you put the name, the vehicle's detail. Okay, the model number, the name, the model number, maker. Okay, something like that. Then you put it over here. Then the total cost, for example, is 50,000. Okay, so they are automatically the 50,000. This one is a personal portion, so we don't put. If you have a personal portion, you just put it. Okay, then in this case, they will automatically go up there. Okay, they will automatically go up to. You have to put like say like for example, it's a GMC whatever. Okay, and whatever is the maker, the GMC is the maker, and also the model, whatever you put detail. Okay. The area C is the building. Okay, and you just put over here. Then they will automatically go up to here. Okay, that's the addition. So if you buy computer in 2021, is still put here. Deposit. The detail of equipment deposit. If you like for example your computer is broken or your equipment is broken, then or you sell it, you sell your things, then you put class 8. Then class 8 disposal. That's the process that you put class 8. Then you put the name detail. Okay, the detail I don't go through it. So the process of this disposal. The process of disposal means how much you sell it. How much you sell it. You sell is the sale price. Okay, the sale price, and they have a personal person and the business person. If you have a personal person and a business person, then you just put it. Okay, the process is your sale price plus if you pay somebody, like you put on the you ask somebody, you put on the website, or you ask an agent to sell it. In these all the things, okay, it's all the things you add up together. Okay, expenses related to your sale, you put it, you add up there. Then you just fill here. Okay, then you just done. Very simple. The same thing, the CCA. Okay, how you find the CCA? As long as you find the class number. So how you find the class number, I tell you, is on the CRE website. So then also that's the same thing is if you have a rental income. So the rental income is 778, right? So rental income is 778, T778, 776, T776. T778 is childcare. T776, I think. Here, T776. So that's the rental income. So if you have a rental income, so when you appliance, when you change your appliance, it's the same thing here. This one is area A, is CCA, is the same thing. So that's class number, right? That's class number. The most time is the most thing is 8, class 8, furnitures, appliance. So most most thing is class 8. So the class 8, the column 2 is you got something is from last year. This last column, last year in 2020. In 2020, the column is in this last column is you just copy from you put your beginning. Okay, so area B is the same thing in this year, because this year if you replace your stove, then you put stove is 8, then you put a stove, okay, like KitchenAid stove, and how much it cost you paid, then you put it over here, okay, and these cost should be including your GST, okay, because you are not doing GST return, you need including your GST. So that's basically is here. So you put all over here, then they come across, they add up here. So that's the same thing, okay? And the detail of disposal, I said, if you sell it, if you want to update your refrige, you think your refrige is small, you want to update your refrige, then you sell the old one. And on the KGG, you sell 400, then you purchase 2,000 or 3,000, very fancy one. Then you're just doing that, okay? That if you sell your older one is 400, then you plus advertisement, something related to your sale. Then you put the process of the disposal, all the things put over here. Then as long as you put here, then the system is automatically take that expenses, okay? So I think that's pretty easy for CCA. So any questions for this one?
No, ma'am.
Okay, that's
Mama,
good.
Mama, I have a question.
Okay.
Question, please. What if you purchase what if you purchase a vehicle 2018 and then you start a business 2019? Are you going to
2019, then 2018 is your 2018 is your personal. So the you purchase for your personal, right? Then if you want to put that vehicle on your business, that's two way. One way is you put your personal put the vehicle on your business, under your business. The first thing is you register. The vehicle registration is your business name. Then that means the business own that vehicle. It's not your personal own that vehicle. So that's the first thing. And the second thing is you need to qualify for your for your percentage. They have says this vehicle some vehicle is 90% and some vehicle is 80% or something like that. Then when you do the registration, you need to sell. Like see, you need to sell the vehicle to your person, sell vehicle to your business, right? So business will pay you, then the registration under there. They will ask you fill out the bills. In this case, the sale price is on the market price, okay? And it's market price. You sell it, then you use that price to your CCA.
Okay,
You
thank you.
understand?
Yeah, ma'am. Thank you.
Okay. Let's do attendance sheet. Number 1.
Here, ma'am. Present.
Number 2. Number 2. Number 3. 4. No, 5. Sorry. 5. Number 5. And number 7.